Let's get started with our update here on the Austin real estate market. So the number of active listings up to 2,600. So you can see the huge jump from, let's call it April of this year, when the market was still really hot, fire hot, seller's market, the craziest market we've ever seen. So now it's hovering in this 24 to 2,600 active listings for the last 3 months. So we've seen a little bit of a stabilization over the last couple months.
Yeah, from the June to July stats, there was a dramatic amount of volatility in the market, just a huge jump. And as we've seen over the past 4 months, that pace is moderated. Inventory is still growing, but at a much slower pace. So when we break that down, we've got the 2,610 active listings, and you'll see the number of sales per month has been declining. Over the past 12 months, there were 869 sales a month. More recently, the past 3 months, 720 sales. And when I ran the numbers actually earlier this morning, the past 30 days, 648 sales. So we take those absorption rates, divide them into the number of listings, 2,610. And David, for the first time since we've been doing these reports, we're looking at an effective monthly housing inventory of just over 4 months.
Wow. Well, let's see how that historically looks. So we can see we are now 8x where we were in the peak of the seller's market, now transitioning towards from a fire hot seller's market to still probably a seller's going to a balanced market.
Yeah,
we're still a balanced market.
We're still in a seller's market, although it may not feel like it, and certainly doesn't sound like it when you listen to the media.
Yeah, because of recency bias.
Correct.
Meaning like, oh, well, what I'm used to is
Right.
half a month of inventory and stuff selling in a weekend.
Right.
So the fact that homes are taking now 2 weeks or a month or 2 months to sell feels like a huge difference. And it is a huge difference, but still not a buyer's market.
Right. And we're going to break all of those metrics down as we work through the stats here.
So we've got the number of sales, and I think this is the number that has changed the most.
Right.
Which is how many deals are actually transacting. We're down 40% year over year, so that is significant. And we're down 15% from last month. And if you look at the number of sales, 648, we peaked in 2020 and 2021, over 1,000. And this is single family within the city limits, so keep that in mind. The anomaly here is 2020 and 2021. So if you look back to where the trend was, we are 35% lower. So clearly, interest rates rising has had an impact on the number of deals that are happening.
Yeah, and you can also look to January earlier this year, where the number of sales were even lower. So, there's some seasonality. There's a lot of volatility due to market sentiment, but still the floor hasn't fallen out on the number of sales. So now we look at the average price, and from a grizzled veteran standpoint, looking at market data, it's the year-over-year metric that really is the canary in the coal mine, if you will. That when you've got year-over-year depreciation, you've got some macros that are current and likely to continue for a foreseeable amount of time. That's not the case here. The most recent numbers are showing a drop month over month of just over 7%, but year-over-year still over 8%, David. So just is in alignment with what we've been saying, given the strong fundamentals here in the Austin market.
Coming back to seasonality, which we've talked a lot about, it's very normal that intra-year prices are going to drop. So the peak of 9/11 in May, now we're down to 794. It's about a 23% drop intra-year. Now, we had talked about probably 15%, so this is a little higher than we had anticipated, which means that there's opportunities. And we just recorded another video that's going to come out later this week. Go ahead and subscribe because you're not going to want to miss this one, talking about how to take advantage of the current market if you're a buyer, and that high interest rates are good for you. So we're going to explain why in this other video. Subscribe. You'll see it coming out later this week. But here you're going to see that if you look back over previous years, it's not uncommon from August to September to see a price drop. 2017 that happened. 2018 that happened. Not as big a drop, but in 2019 it even happened. 2020 it happened. And in 2021 it happened. So this is par for the course that prices will drop month over month between August and September.
So now we're just going to dial into demand a little bit. Days to sell is always a good indicator of the effective demand. And It's going up. Days on market are clearly going up. We're over 30 days for the first time in well over a year. Compared to last year at this time, it's more than doubled, 112.5% increase. And compared to last month, it's up over 40%. So what does it mean? The theme that we've been talking about here is more opportunity for buyers, more of a normal process, not that crazy, frantic, chaotic rush to get into escrow on a deal. All of that is good news. Still 34 days is relatively low number. Once you start getting to about 60 days in a 6-month inventory, that's when there's some real changes that can hit. But we're still looking at strong days on market numbers.
Still, we're lower than we were in 2017 and 2018, which were strong sellers markets. Number of new listings is down year over year. So that's interesting. What does that tell you?
I think that it could relate to some sellers now being scared of the market, fear of loss, not wanting to test the waters, and holding off for that interest rate decrease that will inevitably pump the numbers back up. So I think it's the greed factor, David.
Yeah, people don't want to sell their home for less than it was worth 6 months ago. And I think this is where people conflate like stock market dynamics with real estate dynamics. Nobody's living in their Apple stock.
Right.
So if something gets hit, or maybe Apple's the worst example of these tech stocks, but in their Shopify stock, which is down 85%,
Their
right?
WeWork stock.
So, because they're living in it, they need a place to live. That's why real estate doesn't fluctuate in the same way that in the same way that the stock market fluctuates.
Yeah, there's some intrinsic value.
So everybody's thinking that, oh, the bottom's going to fall out, real estate's going to drop 50% or even 30%. I don't see how that sellers are going to let that happen. They don't want to leave that money on the table. They'll just wait. And the people that can't wait, okay, they'll take a little bit of hit in the short term because they had to move, but they're going to make up for it on the house they buy because they're going to buy at a better deal on the other side.
Correct.
The expired number of listings. So I was curious, because this goes to the point we were just making, is that are people just going to let their homes expire on the MLS because they're not going to sell it for the price that it needs to sell for? So expired listings are in line with last year, and nothing too crazy here yet.
Actually less than the numbers from 17 through 19, which were strong markets as well. So more expired listings in the past than now. I think it's also a function of maybe, that softening sentiment on the part of the sellers to stick with it, and maybe withdrawing prior to expiration as well. Okay, so another statistic that's new to our report is the closed price to list price ratio. It's always a very interesting statistic that really measures the sentiment of the market, but it's also one of the most abstract and voodoo sort of numbers that you can look at. A lot of different moving pieces with the closed price list price ratio. The first is how realistic is that list price. That's difficult in a rapidly changing market like we've had. So what we see here at about 98% sale price list price ratio, it's not showing a substantial discount off of list prices, but when you compare it to the peak back in, let's call it May of 2021, where things were selling 10% or more over list on average, doesn't mean there isn't that occasional one that sold for 50% over list. We've seen some crazy things over the past couple of years. This is just an other indicator that's basically confirming everything we've been saying, which is, yeah, the market is softening, it's slowing down. That's relative reality. But absolute reality is that it's 98%. I mean, that's less than a 2% discount off the list price. It's still a strong market, David.
Yeah, historically, that's where this market has hovered if you look back over the last couple of years. So That's nothing out of the norm. What I think is really interesting here is looking at March through May of 2021, where everybody was caught off guard with what was happening. Real estate agents and sellers didn't really know how to respond because they're like, okay, well, I'm going to list it at the price that it was a couple months ago, and it was just going bonkers. And it's not that pricing went down, because you see what happened was that in 2022, it's only 104, 106, 107%. That doesn't mean the prices went down. But what happened was list prices went up, and so they were selling for less over list.
Right.
And so this is what you're saying, where it's voodoo. And so even though prices have been appreciating, this number is a sentiment measure.
Yeah, it's an interesting number. It's definitely a useful number. But David, the key point that I want to make is that, we've mentioned the real estate market being so inefficient. Hey, when you're looking to purchase a home or to sell a home, the expertise on pricing is critical, and it's even more critical in a volatile market. Um, so don't be scared by the numbers if you're buying or selling. The key is what kind of a deal can we get for you, depending on what side of the equation you're on.
If you want to talk specifically about your goals, go down to the description, schedule a call directly with Lee or I, and we'd be happy to dive into that with you, come up with a strategy so we can help you hit your goals. Bringing you our unique supply barometer. And here you can see when we last recorded, we were seeing moderation getting closer to that 100% mark. And in the last couple of weeks, it is now back, not as high as it was, but it's definitely, we're adding more inventory at a little bit of a faster pace. So it got all the way down to 105%, almost to flat. And now we're back up into the 160s. So you can see the number of pending sales is just overall, it was like 190, 180. And now it's down to 140, 150. And the number of new listings pretty close to where it's been historically over the last couple weeks. So just a little bit less on the sales, which I don't think we're surprised with people getting back into school.
Mm-hmm.
Now, interest rates having been risen, normally this time of year we would see things pick up a little bit, but we'll see how interest rates impact that. Maybe it's just going to stay where it is.
Yeah, I think of all the statistics, this is the one that I look to for forecasting purposes. It's showing the direction of the market, the velocity of the market. And the way I'm reading this is, yeah, we're growing, the inventory is growing, the market's softening, but the pace remains to be seen. And I'll maintain a cautious optimism that we've been accurate on our forecasts, and we're going to remain steadfast.
Yeah, and there's videos out there, the crash, and this isn't a crash. I mean, I don't see a crash. So maybe in other parts of the country, things are different.
Right.
Remember, real estate's hyper local.
Correct.
Not even just to the city level. Like we talk about things on a city level, but it's even neighborhood by neighborhood. Clearly, it's going to be way different in Goodnight Ranch and way southeast Austin to Rollingwood. Those are completely different markets, even though they're both, well, technically Rollingwood is its own municipality, but the Rollingwood area, Westlake area, right? Those are definitely different neighborhoods within Austin that react a lot differently than Goodnight Ranch down in southeast Austin. Not calling out Goodnight Ranch in any sort of a negative way. It's just a lower price point, and it's the very southeast tip of the city.
Yeah. On a larger scale, we look at numbers all across the country, even around the world, what's happening in various real estate markets. Take a look at Boise, Idaho. Take a look at Phoenix, Arizona, and the imbalance in the growing inventories there. That's not the story in Austin. I'll wrap up my take on it, David, which is that I do believe Austin is positioned as a flight to safety investment destination. And this sort of statistic is bearing that out, that, inventory is growing, but again, the fundamentals are strong, and we're seeing that here in these numbers.
And if you want to know why we think the fundamentals are strong, check out our other videos on what's going on in terms of the path of development, our North Report, our South Report, talking about everything that's coming here. Subscribe to the channel so you get updated about future videos that we're posting every week with new announcements. And I think you'll get the sense that we feel very confident in this market in the long term. And that's where I think as a buyer that you really need to have a long-term outlook.
Right.
Don't be worried about what's going to happen the next year or 2 years. Like, what about 5, 10 years from now? And to those buyers that I think this is a common way that buyers think is like, well, I don't know if I'm going to want to be in this home or even in this city for 5 years. So how can I buy a property with this 5-year or 10-year outlook? Well, I have bought houses in cities where I had no intention of staying long-term, but I knew that the city had a good prospect. The investment was going to be good. And even if I left, I could hold on to the property. There's property managers. You can rent it out. It's not that complicated of a thing. People do it all the time. So having a long-term outlook doesn't mean you have to have a long-term outlook on living in Austin.
Yeah. The occupancy is not necessarily the same as the holding period.
Yeah. And as we mentioned, real estate is hyper local. So go ahead and comment on what you've been hearing about in your neighborhood, what neighborhood you're in, or that you've been hearing stories about, and what's happening. And we'd love to hear from you because it is all different. We love as many anecdotes as possible. Thanks for joining us on this month's market update. If you're trying to figure out the market, whether you're a buyer or a seller, go down to the description, schedule a call with us. We'd be happy to talk to you about your goals and strategy for hitting them. And go ahead and subscribe so we can see you on the next video.
Thanks, everybody.